TGIF, everybody. Good NFP day. Hello, Mark Williams. Hope everyone had a decent week. Don't try and make your week on Friday, but I do like NFP days. Usually there's something to fade. Hi, how are you guys? DJ, Nicholas, everyone, team, ForexAnalytix team, another good week in the books. Well, it's not in the books yet. I wanted to start out here with the S&P. And we're currently at the 78.6 level, a little bit above it. 31.35 was the way I had it. And what's even more, I don't know why it astounds me, because, the rule is wedges can retrace 100%. And this wedge I had anchored here. Coincidentally, the high of this day was, 31.30. Okay, and the day before, 31.38. Okay, so it could have been anchored this high. Right here is where we're back to. And it's 78.6. And what I want to point out is that we're back over the megaphone line. So when I was talking about it down here, getting back to 3,100, that's what it said technically, even though that's what it said technically in the environment we were in. Even I didn't believe it was going to happen. Yeah, I know some people are talking 3,200. 81%, 78.6, Jess. Yeah. So, I think that now, and it could stretch to those numbers you're talking about, Pete. But just remember what happened the last time we had an overthrow and what happened once we got back in this. Okay, so this comes in the megaphone line up on top, right around 30.94. And then if you look at some short-term stuff, look at this, 30.90. 30.90 looks pretty important. See, it came back after breaking through the megaphone line, tested it, pushing up to new highs. We're diverging on multiple time frames up here. I may take a shot, risk 20 handles or so. We're no way, well, you can't say no way that we're going to get a weekly reversal, but I doubt it. Pete would like to see 27.90. Yeah, that'd be a big trade. Supply 31.70. Okay. Let's see, since it's Friday, this is a pretty much make or break. We do have a pretty negative week in the precious metals. Okay. This was actually the turnaround Tuesday trade up here in the 1740s. And it got hammered on Tuesday. So we're holding the 1685 level. We've rallied back. I'm not going to stay short. I might even consider getting long back over 1720. But if this is just the beginning and you look at the weekly, depending upon what happens after the number, it's a pretty negative week. It's the 2 week off numbers all the way up at 1734.30. I'd be surprised if we recapture it. And then you just look at, just a measured move on this. Let's look at this. Okay. So from the high, this high, not this failing rally high, it was $70. All right. This was $70 move. And I think we're close to 78.6 back up here on Tuesday. But if I call this a breakdown, right here, and I take $70 from here, it would take you to 1610. If I take it from this channel breakdown right here, it would take you to 1665 or so. And what else was a kind of a interesting change is that silver is not outperforming gold. Maybe it will reassert itself, but that was one of the reasons why I even took a shot at silver up here, and then I was looking for the gap to be filled. It went a lot lower than that, went down to the 78.6 level. That's interesting too. So silver is coming back and holding the 78.6 back under 1738. There's some air pockets under there. So, you know, I still favor shorts there. And the reason was this. We had equality, even a little bit more of equality on the gold silver ratio. You know, this was 20 points. 96 was equality right around here. It's trying to turn. I mean, it's nothing magnificent. And you look at the daily, it's confirmed, a confirmed low. But right here, after this kind of move, I think that a lot, or most, at least for now, of silver's outperformance over gold might have played out for now. Dollar, euro, you know, one almost back to 114 up here. Just be careful. I might attempt some type of fade in the euro. You know, the 1 hour. We got a move up towards 114 or so. And I know a lot of people were looking for lows in the dollar, around 95.80 or so. So we'll see. I think it's a little late to be pushing the short side of the dollar, in my view. So into the NFP, I once had a guy say, Dale, I bought the euro before the NFP, and it was a weak number, and the euro rallied 100 pips. And I said, good guess. So anything you're doing trying to anticipate the market reaction to the NFP is, you know, just a roll of the dice. It's really not trading to me. But how you react to it, if you have all your levels prior to the number and have some ideas of what you would do if the market's got to certain points, you know, is it a short there? Is it a buy there? And you're ready and you're not analyzing on the fly. I just prefer to react to the reaction rather than trying to predict it. Okay. Thank you, Ziggy. So I don't know about you guys. I'm glad it's Friday. Anyway, I really hope that we helped you this week. Did we help you guys this week here in Face? Anyone get help? Learn some things, you know, not just good trades, learn some things from the team that you're now integrating into your trading. And anyone who is not a subscriber able to catch maybe some of the downside in metals. We also had some very good patterns in play. Thank you, Pete. All right, so we laid it out on the floor. If you're not part of our community, that's the best way to say thank you. If you're enjoying Face and it's helping you, it's just the tip of the iceberg because you could be hanging out with good traders all day long in our chat room. What do you think, Gorkum? All right, so Blake, I know you're glad it's Friday too. I think all of us are a little worn out, even though you're a young stud. Are you a little worn out by Friday?
It is crazy out there, huh?
Yeah.
I mean, they're just buying risk like it's nobody's business. You know, I mean, these moves, I mean, I have to pull up a few things in particular that, you know, just are worth noting going into this this NFP. Now, first
I was thinking of top picking the S&P for the 10 millionth time.
Yeah,
you know what I mean.
So let's. We like you got to start off with like the Aussie dollar. I mean, we're reaching for the highs from late December.
Yeah,
and if you look at the Aussie yen, I mean, this is just a complete V reversal. Look at the Aussie yen. That's at it pushed above the December highs. That is amazing, right? Yeah. I mean, that is like an absolutely amazing move that we've seen this week as we've blasted through the 200-day moving average. I mean, just in this particular pair, we've gone from 72 to 7. That's a 400 some odd pip move.
Yeah.
And I'll tell you that the Aussies run me over this week. It's been a hell of a move, you know. And this has been a big one. And you know, I look at it now and it's like, okay, well, what do you do with it here? And I don't know, other than you got to be a little careful with it because it's obviously overbought. You know, you look at like all, you know, on every, you know, the relative strength metric, you're pushing levels
80.
that, yeah, I mean, you're above 80 actually. It's like 82, wow. 83. So you tend to get pullbacks, but are we, are we necessarily going to get a pullback here? I don't know. I mean, you know, the Aussie just continues to take off. You look at the New Zealand. The New Zealand is just ripping right now. Here's the New Zealand dollar. I mean, that's just flying. We're at highs of the session right now, and we're squeezing past the 78% retracement, and it looks like we're going to 66 cents here in the Kiwi. You know, like I said, these moves are just staggering, and it doesn't even matter if stocks are coming down or they're going up. These commodity currencies are just flying right now, and that's amazing. And then you have the Canadian ahead of the Canadian jobs report. Well, we also have NFP too, but look at here. I mean, we're about ready to fill the gap from March. That gap fill, as far as I'm concerned, the gap fill comes in at the where we closed out, which is 134.20. Sorry, and it looks like we're going to fill that. You know, this morning we could probably fill it post jobs report. We are expecting a stronger than had anticipated jobs report from Canada today, but it seems like to me that's gonna, you know, that's coming out. Sorry, I'm trying to readjust something here. I'm sorry, I was trying to pull up my news, but I'll have to pull it up this way. So if you look, you know, the Canadian jobs report, even though we are expected to lose, you know, is that 500,000 jobs? Is that what that is? I'm trying to pull it up on my Bloomberg, but I just messed it up actually.
Which one, Blake?
Canadian jobs report.
Yeah, 500,000 jobs, yeah.
500,000 jobs? Okay.
Yep.
Yeah, sorry, I was trying to pull it up over on my end over here.
What an era we live in, right?
What's that?
What an era we live in. In some metrics, trillion is the new billion.
Yeah.
In other metrics, million is the new 1,000.
Right. It's crazy. It's a wild world that we're in. But I think that this dollar Canadian could actually, you know, trade down to fill the gap at 134.20 and maybe even a little bit lower than that on a positive number. Now, when I say a positive number, that doesn't necessarily mean that we're going to beat, or it doesn't mean that it's, you know, it's going to be, you know, it's going to be some, you know, job gain. It's just going to not be as bad as losing 500,000 jobs. Like let's say the number comes in a little bit more improved. If that's the case, then the Canadian is going to drop pretty aggressively. So anyway, you know, and then probably fill the gap. But remember, this move has already started before the number, which means that, you know, probably people in Canada have already got it. Canadians are pretty good at leaking the data. So we've seen a lot of these moves start. And I say that, you know, kind of half-hearted, jokingly, but the fact of the matter is you see like a lot of the Canadian moves happen well before the data actually comes out. It's just kind of how it is. I think it does actually leak out one way or another, but that's something we got to be watching today. The dollar yen is still strengthening. Now we're pushing like the other yen pairs, and it's not just the Aussie yen that's up against those highs. You have to look at, like, you know, the euro yen and the New Zealand yen and all those other yen pairs, but the dollar yen's actually pushing the resistance from back in April. And so we're trying to push above that. We still have the inverted head and shoulder pattern, points us to 110, but you know, we're going to struggle as the dollar yen is obviously going to be doing worse than the other yen pairs because the dollar has just been getting beat with the ugly stick for the last week. So it's, you know, it's obviously not going to be rallying quite like, you know, the other yen pairs, but it is still holding up well, and dips are being bought. You're not seeing any significant dip in the US dollar Japanese yen, and if you do, it's being bought up anyway. So you know, I would think that you know, let's say it's a weak number. And how many jobs are we looking to lose here in the United States? Is it
just 8 million?
8
Nothing
million.
to worry about.
Just 8? It's 8, right? Yeah, that's what okay. So if like let's say we only lose 7 million, you know, and the participation rate is maybe better than expected.
No chance about that.
Huh?
About the participation rate. Forget about that. The participation rate.
You think so?
I think so. The participation rate has been in a long-term downtrend, and especially as long as the government is giving incentives to low-paid, low-skilled workers to not work instead of working, with the exception of the occasional blip rebound higher, which is like, you know, 1 month report higher, you should expect the participation rate, which had found some kind of a bottom during the past couple of years. I think you should expect the participation rate to start trending lower once again.
You know what's interesting? I'm gonna show you guys something. This is from Bank of America. This is one of their research about credit card investing. This is their credit card, Bank of America credit card data. For states furthest along in reopening, total credit card spending has returned to the same pace as this time last year. How crazy is that? Now, listen,
Wow.
Furthermore, the stimulus from the federal government more than offset the decline in labor income in April, sending the savings rate soaring to just above 30%. This has been particularly supportive of lower income population where total card spending is trending 3% year over year. Yes, you read that correctly. For this part of the population, the year over year spending is actually higher. So I would argue that most felt COVID-19 would be a paradigm shift in spending. This high frequency data very much suggests a V-shaped recovery versus the popular W theory. How crazy is that?
It is crazy, especially if you consider the long-term implications of that. I mean, the initial reaction was, let's put some money on the side because there is a lot of uncertainty. I mean, who knows what happens? I mean, so many people lost their jobs. So many of them prudently are thinking, okay, I'm getting now, you know, this extra unemployment benefits.
Yeah.
But who knows what happens and how long they extend it. So, you know, the normal reaction under current circumstances is to repay part of your debt because debt is expensive, and to put some on the side in case things don't work out. So in case you're not one of the people that are being called back to get your old job back just because the economy had a V-shaped recovery. And in essence, what they want to do is penalize this behavior and get people to go even deeper in credit card debt. Just to give you an idea, Blake, I'm not surprised by that. You know, one of my hobbies was always remote controlled vehicles, you know, drones, etc. So I can tell you that, especially in the US, because there are a lot of forums in the US, you can believe how many times I've read in commentary or in forums that people were taking the money, you know, how were they called, the relief money, whatever, and they were just buying, for example, RC cars or drones or whatever. Which, you know, you be the judge if that's, you know, what's that intended to to be used for.
So it's wild. The consumer spending habits, you know, in the United States are definitely different from other countries. Let's just put it that way. The euro, real quick before I turn it over to you guys, because I want to turn it over to you before the data, because I'm going to have to try to trade some of this data over here. The euro looks like near term we may have hit some resistance as we approach 114. So it's an 88% retracement, also 161% extension of this move lower. I do think that any dip in the euro down towards the 112.50 will be supported. Like this trend line, you can see it's like a pretty minor trend line. I'd preferably actually be wanting to buy the euro down at 111.50, but obviously that's not something that's going to happen today. It's just not going to happen today. But that's what I'm going to be looking for. I'm going to be looking for an eventual move down to 111.50, but hopefully a move down to 112.50 might give us an opportunity just for a bounce, intraday bounce today. Should the number be a little stronger than expected, it might pull that euro down just slightly. That's what I'm thinking and how I want to trade the euro. Your question might be to me, do I feel like shorting the euro? No, I don't. It's too strong to be shorted, but it's too overbought to be bought either. You know what I mean? So I'd rather just buy it on a pullback versus trying to fade this very strong move, which obviously the dollar, this dollar sell-off has been very aggressive. So it's hard for me to get in front of that. But I just wanted to let you guys know that's how I plan on approaching the euro today. And obviously, if we drop down to 112.50, that's going to be an opportunity. And going back to the dollar Canadian, I think the dollar Canadian, we got to keep an eye on it. If it drops, to the 134 level, 134.20, we're almost there. We're almost to this gap fill. There's on a strong number, there's a chance that we're going to overshoot that, and we're going to probably push down towards 134, the figure. Just keep that in mind, because the Canadian's already been pretty strong. And one last thing I want to bring to your attention, I'm not watching this during non-farm payroll. I'm just kind of watching it over the course of the next, couple of days, is the US dollar Mexican peso. I'm watching it because we are obviously at the big 618 retracement from when this move started. So it's been pretty important support. It's kind of like when we were sitting on 22. We weren't really going down, and we're just kind of holding that support. I think it's important that we continue to watch it. Now, what I am looking for is if we, for some reason, break back above 22, I think that's going to suggest that we have a little risk off. Now, I know you guys will probably laugh. You're like, risk off, what's that? We don't even know what that is. But yeah, I think I forgot what it is too. But let's also keep in mind that the S&P's got this ascending wedge. So in this ascending wedge, we're hitting the 78% retracement. The NASDAQ 100 is, hitting all-time highs, but rejecting it the last 2 days. So if the S&P pulls back and we can get, back down towards 3,000, that risk off is you'll be able to see it through, I think, the dollar Mexican peso, obviously some other pairs too, but I think that's what I'm going to be looking for if the S&P starts breaking through the support. But
hey, Blake,
yeah.
Would you mind showing your look on the notes or bonds? I know you trade notes rarely, but once in a while I know you follow them.
Yeah, I haven't in a while because I feel like I missed this move when we broke out of the when we broke the wedge lower.
Mm-hmm. Yeah.
When we broke out of this triangle on Monday or Tuesday, I'm like, oh man, yields are going to scream. And then I totally, like our analysis has been, we're going to push back towards the 136 level, which is the 618, which, we're making our way there.
Nice look.
Yeah. I missed it, and
it was like a brain dead person for about 3 months, just going sideways, and trading was light and volume was light. It felt like they took the market away from us, but
nationalized market, as you said yesterday, Dale. I couldn't agree more.
Yeah,
there you go.
And don't fight the Fed and all of that stuff. Yeah.
Steve and Stelios, I'm going to pass it over to you guys ahead of the numbers. I want to thank everybody for being part of our community. For those of you that are with us, and for those of you that are not, I hope you take an opportunity and give us a trial and download the mobile app when you do that, and come visit us in the chat room. I'll see you guys on the week ahead video over the weekend. So thanks, everybody.
Have a good weekend, Blake.
Thank you, Blake.
Thank you, Blake.
Thanks, guys.
Good morning, guys. How are you doing?
Good morning, buddy.
Good morning.
Good, buddy. Hey, Steve. Good weather here. It's the summer now, finally.
Indeed. Normal summer, not like the heat wave we had prior to that, which was just it was just crazy.
What's the water temperature right there for you guys just going to the beach locally?
You mean during...
Not in your little play pool in the ocean.
Okay. Actually, I just know, what's the temperature? It's warm. Let's put it that way.
Really?
Can reach close to 30 degrees Celsius on warm days. And first of all, we don't have an ocean, right?
It's the Mediterranean. What are you off of right there?
We have the Aegean Sea. Let me show you.
Okay.
So this is the Aegean Sea. Yeah. Okay, and the Mediterranean is below.
Okay.
Okay, so it's more of a closed sea.
Translate that into Fahrenheit, 30 Celsius.
It's a lot. It's a lot. Don't worry, it's warm.
Okay.
So you get FX markets.
There you go. Like 80. Let's say 85. It can get close to 85.
Oh my God, that's like the Caribbean.
And geography as well. You get here. You get everything.
Yeah, you get.
But
everything.
also,
what am I doing here?
But it also depends on where you're swimming, because, for example, there are some islands in the middle of Aegean that, in general, have much colder waters in comparison to other areas. So it's also, where you're swimming. So
waves?
No waves. And we don't even. And another positive thing is no sharks, no dangers.
Oh, that's nice.
No.
And nude beaches, because Joe says you go to nude beaches a lot.
That's all that Joe is thinking about.
By the way, my friend Costas just said that they've announced storms coming and the drop in temperature. Go away, Costa. Okay, go home. Switch off. Okay. So we have numbers in a couple of minutes. We have enough time to touch upon a couple of things. We had Michael Barnier, the head negotiator for the EU, speaking today, and he said that there is no meaningful progress being made, especially on the on fishing. And this has been, for people who have been following this saga, this has been a major sticking point for the Brits, and they want basically they do not want to adhere to the rules that the EU want to put forward, which means basically a level playing field for everybody on the UK fishing waters. Which
they haven't got the note. They don't even need to go fishing. I mean, why go catch fish? You can get freshly printed money. I mean, who needs fish?
Yeah, true. So he said that as long as there's no deal on fishing, there's not going to be a trade deal with the UK. And he said it, this firmly. So that theoretically is a negative headline, but the pound is rallying today. So go figure that one out. I guess it has to do with risk on and risk off, but that was we haven't had a lot from the Brexit side for days now, so it's good to get something back from there. I'm just kidding, I hate it, but that's what we had there. Well, what else did we have today worth mentioning? It's been actually pretty quiet. We had German factory orders. They're just collapsing, minus 25.8%, expected minus.
That is definitely worth another couple percent high in the DAX.
Yeah, man, we joke about this, but seriously, it's just.
But that's how it works, dude. Why are you joking about it?
And we had some other minor numbers like Italian retail sales still very negative. So, these are all kind of expected. The market's forgotten about these. All we're doing is looking 3 months ahead into the V-shaped recovery, and everything's going to be back to normal. Clearly, some numbers are going to be going back to roughly where they were before, like Blake showed before. But I think in major European countries where we've had serious shutdowns and lockdowns, I think it's going to take a little bit longer to go back to normal. But then again, what do I know?
Is it? I was
5
reading
seconds.
guys.
Dale.
Oh,
Numbers
okay.
coming out in 3 seconds.
Go. Okay.
What? Positive? Have they made the same mistake again? Wow. Is that? That doesn't make sense, right? Because this is a monthly number. We know what the weekly unemployment claims are, and there are definitely not any gains, job gains. And the same with Canada, positive numbers. Do you make any sense of this, Steve?
This is, yeah, I don't really understand it. Doesn't make much sense, especially considering the recent data we got. I tend to believe, though, that this type of a surprise, if it's not some type of a mistake.
Wow. I am shocked, seriously shocked.
This ought to kick yields
my
into high gear.
prediction is that this might produce a reversal lower, actually. I think we might see an initial reaction higher in risk, and given how distorted and crazy this market is, I wouldn't be surprised if this marks a short-term high.
I have no idea what to make of this. Seriously, I'm really shocked. Remember last time they made a mistake with a negative number?
Yes,
but
that's why I'm a little bit skeptical, because we've seen some huge mistake in calculations during the past couple of months, because we've had some out of this world numbers.
It's not one. The problem is it's not one number. It's four of them. You know, manufacturing payrolls, private non-farm payrolls, non-farm. You know, you have four numbers which are anyway. Let's see. You know, let's not dwell on that. Average hourly earnings are a lot lower than expected, but this is consistent with low skilled jobs coming back.
Positive instead of minus 8 million. Canadian employment change, same deal, plus 290 roughly versus minus 500K. So yeah, I assume it's not a mistake, because we see the same trend in the unemployment rate in Canada is now 13.7. Unemployment rate in the US is 13.3. US average work week hours is actually better at 34.7 hours versus 34.3. Manufacturing payrolls 225 positive versus minus 440 negative. So these are the numbers, and initial reaction is
how much weaker NASDAQ is compared to
now.
For days
look at this.
Now.
Look
NASDAQ
at this, Dale.
Compared to S&Ps.
The DXY has reached our downside target that we had since before we broke the triangle. It's actually reacting higher at the same time that stocks are reacting higher.
That's,
you know, from an economic standpoint, it makes sense that the dollar would react higher to positive numbers. So now we have a short-term reaction that's both positive risk and positive the US dollar. My intuition tells me that this is not going to be lasting very long. So I'm wondering if these numbers, which were totally unexpected, are going to be the catalyst for a blow-off top. At least
the NASDAQ is lower now, buddy, on the day.
It's unchanged, actually.
It's up 32.
It's exactly unchanged, yeah.
Yeah.
It's exactly unchanged. And speaking of which, I think that this idea that I talked about early in the week.
That wedge, it's breaking down.
Oh, yeah. I think that it has started playing out quite nicely here.
Yeah, we didn't get a third drive, see? Sometimes
we didn't.
It's just two. Yeah.
We didn't. That
was a great call. I think it's going to continue for a while.
I think it's still early, Dale. I think there is still a very, very favorable.
Well, you're not late. Today's a breakdown day.
Yeah. So I still think that if you don't want to be involved, I mean, if your logic tells you that it's totally stupid to be long risk at the moment, irrespective of all the stimulus, because valuations are, in some cases, as high or even a little bit higher than they were in the 99-2000 Nasdaq bubble. In some other cases, they're very, very close to that. The reason I keep mentioning that as a comparison basis is because there is absolutely nobody that is not accepting that 99-2000 was a bubble. So there is no argument between people in the financial industry. There is absolutely nobody that argues if or not 99-2000 was a Nasdaq bubble. Anyhow, that was proven because the Nasdaq lost 80% of its value following that. So it's, it's by definition a bubble only by seeing what happened following that. So now we have these type of valuations. So I understand why somebody would not fundamentally be able to persuade himself or herself to be long, despite all the stimulus, as I said, because we know that liquidity and stimulus are driving the market at a huge extent. There was a very nice chart, actually. Let me upload it from my phone because you need to see this. So let me show you this. I think this is one chart that gives you, it's what we say, one picture equals 1,000 words. So let me upload this.
Yeah, yields are spiking with it too. TLT is going to be down.
So let me show you this. Handles. I just uploaded it.
Stephen, that approach is also probably, even though now we're probably there, a better way to go instead of just top picking and getting stopped.
Look at this.
S&Ps.
Look at this, Dale.
Yeah. Wow.
This is the forward PE, price to earnings ratio, from the Russell overlaid with the Fed's balance sheet.
Yeah. There's a little correlation there.
I think it has to be a coincidence. It can't be true. That they're actually related. I think it's just coincidental.
Yeah, Fed doesn't affect things.
No, it doesn't. It definitely doesn't. What I was saying is that I do understand why somebody would not want to persuade themselves to be long because, they can't, really, get the grasp of it. But on the other hand, trading, for example, this ratio, the Nasdaq to S&P ratio to the short side, is something that makes you neutral, having to do with risk in the market, and you're just, in essence, trading the reversal in the out of this world overperformance of the Nasdaq for such a long period of time, especially considering that one of the narratives currently is that the economy is reopening and everything is going to be all right. But think about it. Which is the index that really suffered? Which are the indices that really suffered? Or let me say it opposite. Which is the index that really suffered much less during the shutdown? The Nasdaq suffered a lot less and rebounded a lot faster. Why? Yeah. Because some of its key stocks were considered safe havens during a shutdown. Netflix did well for obvious reasons. Amazon did well.
Even Microsoft, it looked just like a
Microsoft
in a bull
because
market.
People were exactly. So now that the economy is reopening, theoretically speaking, all the stocks that got battered down should do some catching up, and all the stocks that really benefited from the idea that now that everybody's in lockdown, they have to make more use of some services that they were not using or they were using less. Now, theoretically, that trend should somewhat reverse or at least pause, right? So I think that, you want to be neutral risk. You can still trade the indices by trading the spread of these two, and it looks quite appealing, right? Now, needless to say, so far we have a 1.5% up day in the S&P. We are now testing another support resistance area to 3165. You can see it here. Previous resistance there. We spiked lower. Back then we retested it. I really think that today, and this surprise number can prove to be the catalyst for some type of a blow off top before we get at least a deep pullback. In which case, given the move that we've already seen, probably any deep pullback should be bought because the market is going to be buying at both hands. There's no question about it. But there's also no question in my mind that this move higher is, completely overblown. So I'm pretty sure that a lot of weak long hands, a lot of people are going to be capitulating and they're going to be like, oh, the hell with it. I'm buying. I mean, I can't see this market move higher anymore. Natural or anyhow, not natural, yes, FOMO. So, I can't see this market anymore move higher without me. I'm going to be buying. And they're going to be buying at, worst possible prices having to do with a short-term move, which is, nearly exhausted. And, these are the people that are going to be finding themselves out of the money pretty soon. And if they don't have the patience to hold on their positions, they might even close at a loss. So let's see how the day evolves. As I said, the DXY has found support at this horizontal support resistance area. So pay attention to this area. We might see the beginning of a move higher from here. I think that now that the USD CAD, Blake mentioned it before, has filled the gap. Yeah, it has filled the gap. As I was saying since the day before yesterday, I think that the risk-reward ratio for being short the USD CAD is now not anymore there. It was, if you wanted to short it, once we were breaking through this triangle, but I think that there is no risk-reward anymore here. Next downside area of support is at 133.20. I think that USD CAD can turn higher rather soon. The same applies with Aussie and Kiwi. Aussie and Kiwi have had impressive moves to the upside, but really don't chase them up here. I mean, for example, you want to buy the Aussie, buy a retest of like 66.60. Don't buy it up here. You want to buy the Kiwi, wait for a retest of the, for example, 200 DMA or so. I don't think you should be chasing the market here. It's quite dangerous, and in the vast majority of the cases, chasing a move that has already extended so much usually proves to be a very, very bad idea. And I know that normal human psychology is to feel like you're losing money when you're just not making money at a big move. But if you lost the move, you lost the move. That doesn't mean you can't correct one, let's call it mistake, although I don't think it's a mistake because this market has been very hard to trade. I mean, it's extremely hard for somebody to have bought a move like the one we saw to the downside and hold on to a move higher of like 45%. I mean, I was long the S&P from like 24.20 and, I closed my position with a very decent profit at 28.50, and I thought, that was an amazing trade. It's not easy to ride this move higher because it's natural to expect that you're going to see a pullback a lot sooner than it's already happened. But you can't correct one, let's call it a mistake. As I said, I don't think it's a mistake with another one. So jumping late on a move is not going to make up for what you think you should have made and you didn't make. It's probably going to hurt your account. So, that's my personal advice here. Let's see what the metals are doing, and then we're going to move to yields, as Dale mentioned. So, clearly, this has hurt here gold and silver for obvious reasons. Gold is retesting this descending channel. This 1690 is an important support resistance area. Let's see if we're going to manage to close below or above it today. Here is silver back at 1730. We timed this reversal in silver quite nicely. I mean, we were expecting this move out of this triangle to be terminal. I still think silver can correct decently lower before it moves higher. I do think that you should be buying both silver and gold at their pullbacks. I don't think you should be jumping in buying them like immediately after 2 or 3 days necessarily, but I do think that they're going to prove to be nice buying opportunities. Now having to do with platinum. Platinum back tested earlier today, this 800 support resistance area support. If you remember, I made it very clear that as long as we are below 875, you should be careful because, you know, the closer we were to 875, the risk reward was skewed to the downside. So far, we seem to be trapped in this range, 800 to 875. So I think, you know, whichever of these levels break, it should produce an extension. And here is Palladium to finish up with the metals. Palladium is so far holding up decently. I think that as long as the risk is remains well bid, it shouldn't collapse lower. Here is copper having a very big move today for obvious reasons. I warned you yesterday though, be very careful because one key area for copper was 248, but the next key area, triple confluence of resistances, is where we are currently almost at, 256. 256 is the 200 daily moving average support resistance area. Let me see if it's also a fib area. Wouldn't be surprised if it was. Yeah, as you see, 61.8 more or less there as well. So let's see what this level does for copper. I would definitely not be buying it up here on resistance. Crude oil, to finish up with this before we jump to FX. Here is crude oil, another good day today. Good thing, I'm actually long crude through. I have a position in, I've bought 2,000 stocks in Total. So, you know, this is doing quite nicely. Actually, let me have a look at it. Yeah, bought it at 33.5, so it's doing quite nicely. So at least, you know, I have some long exposure in risk through that. But having said that, look at this ascending channel. It's quite steep, and we're once again bumping our head on resistance here. So in the short term, even crude oil is overdone. I mean, we've already seen a monstrous move. This is a continuous from 11.5 to 34.5. We've appreciated 210% in 33 trading days. I think that, you know, the risk reward doesn't make any more sense being to the long side before, let me delete all this, before we see at least some type of a pullback, right? Something like this. Let me have a look. Grega said, yeah, I can hear a keyboard. Grega, is that you here?
I can hear it, yes. My keyboard.
Yeah, I could hear a keyboard. Okay. Nice to have you here. What do you think about today's move? Is it a blow-off top in the short term? What do you think?
Well, I think that the trend that is seen since Monday is still intact, and I believe this will continue. If we will see some dollar strength into the US close today, I guess this will be just a pullback and probably opportunity to join this weakness that I think can resume to much lower prices.
Wait, are we talking now about the dollar?
About dollar in general, yes.
So you don't still believe that the dollar can see a higher high?
Yes, it can. I mean, on the higher...
Why don't you grab the screen?
Yeah, sure. Okay.
Okay, cool.
So regarding dollar, I think that still this is a corrective setback from, let me just make it bigger, here from the highs. Okay, but I believe that this wave C is still incomplete. I think that there can be more weakness, even maybe towards 95, 94.
The previous lows, huh?
Yes. So the fact is that we have to respect what the market is doing, and not only on dollar index. I'm looking at cable. I'm looking at the euro dollar, and the structure with these breakouts that occurred a week back. The structure is looking incomplete. I'm tracking a 5-wave movement. So until I see 5 waves accomplished here, I remained bearish on the US dollar. Also, looking at the euro dollar, since we are talking about the
euro dollar, by the way, is trying to produce a reversal candlestick so far today on the daily. Of course, it's very early on the day. But
great analysis, call, and pip on cable, Grega.
Yeah, thank you. Hey, Dale.
From last week, you know. Nice.
Yeah, I will also look at cable, yes. Okay. And before we move forward, well, dollar index, euro dollar obviously are linked. And here I'm looking at Bund futures. I see a very nice breakdown, and it appears that we could retest this March 19 lows. And if that's going to be the case, then I think that this euro dollar will stay in play on the long side, because after all, this rise on the euro dollar came after this breakdown on Bund futures. So I assume that we could retest on euro dollar this early March highs, maybe even accelerate slightly to the upside. And if you just look and focus on these substructures, you can clearly see that there are no 5 waves up. So I think that there is, based on Bunds, based on substructures on the euro dollar, I think that overall dollar weakness could remain in the cards. Also, looking at some commodity currencies against the US dollar, I think that actually we have the same story. And since we mentioned also cable,
you know, Stelius got bearish the Bunds on a product at the top.
Nice.
Are you here, Stel? That was a nice entry up there. He's at ballet class, I think.
So here we have cable, and as you know, last week we talked about these 5 waves up, followed by complex correction that gave us an evidences of a bottoming here just below this wave 4 swing low. And of course, this reversal was confirmed by 5-wave rise in a smaller time frame. And since we are stepping here in a new cycle, okay, this was 1 leg to the upside, a pullback, and you have now 3rd leg to the upside. Even if this is wave C or wave 3, it doesn't really matter. What really is important here, that we need 5 waves to the upside before this current cycle can be finished. We are now just at the temporary resistance, I believe, so maybe there will be some pullbacks coming in the near future, but I think that there can be more upside available after setback, and this goes very nicely with the euro dollar and on the other hand with the dollar index as well. Now, if we take a look on Aussie dollar, even here, looking at the 4-hour chart, okay, we have seen a nice break out of this triangle. I definitely did not expect such a strong move here to the upside.
Yeah, that was an extended
move. It's an extended, and looks like that we have to respect what the market is doing. It's making clearly an impulsive rise. Notice that this move to the upside in the middle of the week was very strong, okay, much stronger than maybe some of the previous rises in the past few weeks. So in my opinion, this is an impulse that can also continue to the upside after a setback. Looking at dollar CAD, what is really important here on dollar CAD is that actually we also here came out of a triangle. So we have to understand that this drop can be temporary. At the same time, notice that we are now moving into this March 09 gap. So we filled this one. Maybe we'll get, as you know yourself, those gaps can play a very important role regarding to reversals once they are filled. So maybe we'll get some kind of a recovery, but I would not be surprised if we see another drop then after this 4th wave, and you will actually see that you have another gap down here back from February 21st. Okay, so I'm expecting more weakness here on dollar CAD, and if you're wondering what this the higher degree structure based on this ABC drop? Well, looking at the weekly chart here, I think that we could be dealing with a triangle, because we have here first 3 legs down for a wave A, then you have 3 waves bounce for a wave B, and now maybe we are here moving into late stages of wave C. So March 09 gap or February levels could be maybe at least temporary supports for a new recovery.
I think 132 was the objective off the triangle that we broke down on at 3580.
Yeah, I see your point.
You know what I'm talking about?
Yes,
yeah,
yes.
on the daily.
Projection is 132. Yes.
Yeah. Okay.
It makes sense and very good target.
Steve yelled at me when I made that forecast.
No, I just told you that, you know, the path of least resistance remains higher.
All right. Well,
which is true.
You're mean to me when you don't agree.
No.
Yeah. Well, you treat me like I'm Henrik or something.
You know, the fun part is that I actually, before I had to jump on a meeting, I heard this guy a little bit yesterday. The fun part is that he seems to have the right idea about what is happening in a macro environment, and he's interpreting the right, he's making the right assumptions and getting the wrong, you know,
scenarios.
Results. Yeah.
Yeah. Yeah. Well, we'll see. Time, like everything, time will tell.
Of course.
Well, the price action, the price action itself is always the most important, right?
Yeah.
I had one webinar with Jody on Wednesday, and we were talking about fundamentals as well there. And I said that, look, whatever happens in fundamentally speaking, everything gets calculated in price. So based on the short-term trades, I think that fundamentals are still very tough to read, definitely not easy to trade.
Yeah.
Because fundamentals do change, and so the reactions to fundamentals as well.
You know who agrees with you? Jack Schwager, and he's talked to quite a few traders.
Yeah.
He's the guy who wrote Market Wizards. So, yeah, he agrees with you. He said, you know, fundamental traders, and, you know, that was a great example. If the fundamentals are still there and price is moving against them, they go, well, God, I mean, fundamentals are still the same. I should add on here. If it was a good buy or good sell here, it's even better here.
Maybe on the long term, you can be positioned for fundamentals, but you have to be very patient before they actually.
You need to be very patient. You need to have very deep pockets. Yeah. Yes, exactly. And you need to have a rock solid psychology. Otherwise, you know, it is very likely that you're going to panic and capitulate before you're proven right. And at the end of the day, you know, the feeling that you get when you're proven right is amazing, but what can you do with it if you've lost your money? Right?
Actually, fundamentals would be easily to trade and to make money from there, then definitely this would teach you in school, right? In economics, but they are talking about.
Yeah, you don't want to know what they teach you in school in economics, yes, because that's a big topic of conversation. They teach you trust.
But I'm just going to say that it's not the right story that would be right over and over again.
Yeah. So, Grega, the elephant in the room, where do you see a reversal in the S&P, and how deep of a move lower would you be looking for?
Well, I'm actually watching a few scenarios here.
Yeah, I have the same measure you have there, the 100% extension of wave 1 to wave 5, right? Which comes, my measure is 3,227.
And at the same time, notice that we are moving into this Elliott wave channel resistance lines.
Yeah.
But I'm just worried that we will see an extension up into this into this February gap.
An overthrow, huh?
Yes, it could be. I mean, this February gap, it's still open while the Nasdaq has filled. And it's very interesting that Nasdaq is actually now, it's slowing down.
Nasdaq still in an ascending wedge, yeah.
Yes, it's slowing down. So maybe the S&P 500 is now trying to catch what it missed earlier in the last few weeks. And once the S&P 500 also maybe even moves into this gap, who knows? That's when market could actually face a pullback. At the same time, I mean, NASDAQ 100, I'm sure they're in the media once we breach decisively to a new high. I think that even more investors and sentiment will move into extreme levels. And I think that's the timing when we will have to be very, very careful. But from a trading perspective, I know that this is very tough. I mean, I'm sure you don't want to short this, okay, because it's too risky and too high to be long. So I just think it's game of patience. You have to wait clearly on a free wave setback and then just trying to join the uptrend, which I believe will continue after an ABC drop. But whenever this occurs, no one knows, but I think there will be opportunity.
Thank you, Gregor.
Thank you.
Glad we got him in this week.
Gregor, just a very fast question. What about yields? Okay. Do you think, I mean, do you think that yields have bottomed out, or do you think this is a temporary rebound? To answer also,
I think it's temporary. I have notes here.
You see Dale, so he's looking for her. Yeah.
Okay.
Yes, I think that this is consolidation. Maybe you can see even maybe it's a triangle here. I just don't see a top formation yet. I think it's a little bit too soon. I think when this market will either find a support here and continue with the triangle, or maybe just continue higher into wave 5, that's when stocks will
pull back.
A pullback, yes. And if we are approaching potential resistance on stocks, maybe based on timing, I think that we could see it till summer starts. I think that this will be a timing when this market will also find a support.
Great work.
Okay, mate. Thank you very much for being here. We have an interview, so we have to pass it to Dale. Dale, who do we have today?
Akil Stokes, pass me the baton. Oops, I tripped. I dropped. Yeah, Akil's with us. I haven't talked to Akil in a while, and he's in the house, so I could get him set up now if you guys are wrapped up.
Of course.
Gregor, thank you, Wizard, for dropping in.
Thank you, Gregor.
Yeah, another great week of analysis by you and the team. Thank you, Steve. And Akil, I'm going to get you set up so that we can have a conversation. Okay. There you are. Welcome to Face, Akil. I've unmuted you, so I hope you have a mic.
I do. You should be hearing me right now.
Got you, buddy. Nice to be speaking with you, my trading warrior brother. It's been quite some time, and thanks for coming in on a busy day with the NFP and wild markets. How have you been?
Wild world we live in.
Yeah, I mean, it's a Rod Serling episode that I can't change the channel. And, I want to talk about what's going on, but, it's been so long since I asked you how you got into the business and, a little bit about your journey and how you got started. And, it's always interesting when, people have evolved during a career to get the point A, the starting point, the origin. So you want to share with us how it started for you and who do you blame for pushing you on this path?
Sure. I'll give you the brief version, and
but before you do it, we can share. You can share your screen with the green box. It's on your drop-down menu, and then we could kind of see what we're going to be talking about after that. Right. Do you see the green box?
I do. I'm trying to figure out. I've been sick all week, so my mind is still kind of
okay. So you just click
a little cloudy,
it's coming up. You didn't have COVID, did you?
I hope not. No, I think just I don't know what I had, but I don't think it was COVID. I feel better now, but just kind of I've got two kids, so you know how that goes. It's
yeah. Oh, okay.
journey.
Yeah, they're laboratories.
Exactly.
So how long ago was it, Akil? How long have you been doing it? And like, what was your first gig in the business?
So I started back in 2007, which seems like ages ago now.
Yeah.
And I got started in investments. I don't want to say purely by accident, but I think I was blessed that my father did a good job of keeping me financially educated. I think it's a major problem in this world that we aren't educated more just on the basics of money, how money works, investing. And, I perhaps have some conspiracy theories behind that. But my father did a good job of, from a little kid, teaching me about money, teaching me about savings accounts back when they had interest, teaching me about certificates of deposits and money market accounts. And when I graduated college, I spoke to him. I had some money saved up just from, I'm pretty frugal and I've worked my entire life. So I had some money saved up, and I just had a conversation with him about what to do next. And he mentioned investing. So I started looking into investing. At the same time, things were getting serious with my girlfriend at the time, wife now, and ended up finding out that her grandfather type figure was this big time investor, this local millionaire that did real estate and invested in the stock market. And I kind of just used him as a mentor, right? First, I started off by just sitting in his office and just listening to his conversations, being a fly on the wall, kind of taking notes. And eventually he took me under his wing and kind of taught me about investments. And I first got started in the stock market, and that's where I got a bug for it. I enjoyed the process. It wasn't something that I planned on doing, but I liked it. It was a game. It was a game that you can never truly master, but something about it kept bringing me back. And eventually it turned into something that I wanted to do full time. Keep in mind, this is at the time of the recession in the US here. So I couldn't get a job. I was in grad school. I was too underqualified because I had no experience. I was in grad school, so I was too overqualified for what they needed to pay me. So I was kind of stuck in the middle. And I said, hey, why not follow this? And at the time, I was doing pretty good in the stock market, but it wasn't enough to live my life off of. And a friend of mine told me about Forex. And of course, he told me all the things that you see on the internet. Forex, a foreign exchange market, it's so big. You can make more in less time with less money. And I'm like, yeah, this is awesome. I'm going to be a millionaire overnight. Yeah. And I entered it kind of with the wrong mindset. I entered it with the mindset of get rich quick. For me, I was this stock market guru in my head because I did well, even though I think anyone did well at the time. And I learned the hard way that it was going to take work. And I was stubborn for a long time. I struggled trying to figure it out by myself. Eventually, I kind of gave in and admitted that I needed to get help. I got help. I got coaching, mentorship. I still struggled because I was still looking for the shortcut, looking for the magic strategy that was going to make me money without putting in the work. And then eventually, when kind of things were at rock bottom for me, I had a long talk with myself in the mirror, accepted that change needed to start with me. And I went about doing what I needed to do to change. And, you fast forward 10 years from then, 13 years probably from then, and became a consistently profitable trader, and now I'm living my dream life. I'm doing exactly what I want to do each and every day, which I'm blessed.
Okay, so you went through an evolution of methodologies, and probably some, mentorship, and I'm looking at your setup here, and it's pretty clean. Looks like you're only using, what is it, RSI underneath, and
yep, that's
pivots.
All there.
Yeah, and you're using some kind of supply demand zones.
Yep, just a visual support and resistance. Yep.
Okay. All right. So, and now you mentor people.
Yes.
So you've gone full circle from, I know for me as a mentor, I think a mission of a mentor is to help people avoid stepping on the landmines that we did.
Yes.
And, because it doesn't show up in the P&L, but bad trades, losing trades, if you could teach people to avoid those, they have a much better chance of survival. So why don't we talk a little bit about some of the methods that you use yourself and that you teach and how it applies to, I guess we're looking at Euro right here.
Yeah. Well, first, and I'll piggyback off of what you said. I agree 100%. In that period where I said I kind of turned my trading around, I was really at rock bottom and I couldn't figure out what needed to be changed. And eventually I discovered, just by doing reviews and whatnot, that, I was basically shooting myself in the foot. And I kind of, I didn't think at that point, I was going to make it in trading. My nest egg was kind of running out and I was starting to fill out resumes. And I said, how about I just try to eliminate my mistakes? Because I wasn't trading poorly. I was just doing dumb stuff. And I put forth this goal of just making one less mistake per month. So if I was making 20 mistakes a month, let's say the month of January and February, my goal was to make no more than 19. And it's amazing. Like you said, when you can eliminate those mistakes, you keep more of the profit that you were making anyway.
What were the main ones, Akil? What were the main mistakes that, usually it's it's an area that, and we all know, I mean, I've been doing it for a long time and I still know my weaknesses is I have trouble with great holds. I make the trade, I make the tough money. I sometimes just take everything off instead of just leaving a piece on when the windfalls come. So to me, it's having the patience to wait for targets to be achieved as a weak point, which if you have a decent hit rate, it doesn't hurt you. But if you don't, it's going to hurt you because you need those windfalls to make up for your bad trades. So what was it for you? What were the mistakes, the one a month, that you found you needed to eliminate?
Very similar. It was basically anything involving money. I was very emotionally attached to money. So yes, trades that I should have kept on, I would exit at the first sign of profit, because in my mind, if I made money, it was a good trade. In reality, I should have made more. But it was taking profits early and moving stops back. So I would cut my winners short, not getting what I'm supposed to get from my winners. My losses, I would move my stops back. I call it trading off the hopium, right? Hoping that the market would reverse and give me a shot.
I call it CIC, a CIC order. You know what that is?
CIC, no.
For a stop, cancel if close.
Oh, yeah.
Huh?
Yeah.
All right. Okay.
But that was it. Yeah. So my risk reward was all skewed, and I had a really good hit rate, but my wins weren't covering for my losses. And it was weird because I felt like I was trading good per win percentage. I'm doing air quotes here, but my P&L was in the negative.
Okay. All right. So, that I think that's so common, first daylight syndrome. So the way that sometimes I overcome it is trading in pieces on both the developing of a position and the letting go of a position. Do you trade multiples so that you could take partial profits and still have something going? Is that what you teach people to do? Take partials?
Yes, depending on the strategy, obviously. If it's, I'm more of a counter trend trader myself, but if so, for my counter trend trading situations where I'm looking for just a quick relief in the market, a quick reversal, I'm usually one in, one out, meaning I have a single exit position. Because those moves we're not expecting to follow through. But if I'm in a move where I'm looking to catch the trend up, then yes, certainly I think there should be an initial profit target, a safer one. I think that helps mentally as well. And then you can have either one or multiple other profit levels for your longer projection. So I definitely think that's important.
All right. Well, that's interesting because I have a kind of like a natural affinity to fade stuff. So what do you use to know when you have a low risk counter trend trade? I see you're using RSI. What gives you your higher probability outcomes when you're top picking and bottom picking, looking for reactions?
So the main thing that I'm looking for is levels of support and resistance. So that's I guess you can call it the backbone of my trading philosophy. And even my trend continuation opportunities, they all come at levels of support and resistance, because I know that those are going to be decision points in the market. So if we look at the euro here, for example, and what a weird jobs report this morning, this is a previous level of structure. This is a previous level of structure resistance. So if price were to come up to this level, I would call this a decision point, and the market's going to make a decision. Either one of two things are going to happen. One, it's going to hold that level and we're going to see a little bit of relief. Two, we're going to violate that level and we may see a continuation higher. So I go through this 4-step process called identify, predict, decide, execute, where I want to identify what the market is doing, where the market is at. Based on what I identify, I can then make a prediction, right? If the market is here, then I predict the market to go higher, and then I predict the market to go lower. Once I make that prediction, then I want to decide how I want to enter the market. And that's where I'm looking for specific reasons to get involved, whether it's a single candlestick formation, whether it's
maybe some confluence with the RSI. And with indicators, you see I only have one on, it's always secondary to price. So a good example would be here. If we were to come up, I don't know why I deleted that, but if we were to come up to this zone, right, I wouldn't enter right away. So I'm not going to have a limit order sitting there waiting to get short. I want to be predictive in my analysis, but I want to be reactive in my execution. So I'm going to say at this level, if I'm looking for a counter trend trading opportunity, a short opportunity, if price action gives me a pin bar higher, a lower low, lower close reversal, then I'll enter next bar market. So what I'll wait for is something like this, for example. So price comes here. Market gives me a sign that maybe we've probed this level, we've tested this level, but found selling pressure at the highs. That could be an aggressive entry right there. I'd rather look for a little bit more confirmation. Okay. Yep. So a close below, just adding a little bit more confirmation that, hey, the selling pressure has taken over, and there's a better probability of this thing going short than high. And we never know, but we're just trading in probabilities in the market. And that's what I mean by reactive. So I think people...
Go ahead.
Oh, so I think a lot of traders get in trouble because they have the prediction part down, but maybe they react too quick. So they assume just because we hit structure means we need to sell right away. And the reality is we need to be a little bit patient. It doesn't matter what your entry signal is. It's going to be different for different people, but we need to wait for the market to give us that confirmation that what we're predicting is more likely to happen than not. And then obviously putting ourselves in a good risk reward scenario as well to complement that.
Okay. And what do you use RSI for? You'll use it just for overbought, oversold, or divergences, or knowing whether market confirms high or low? Because you don't have much on here. It's the only indicator you have. I'm curious why you have it and how you use it.
I use it for both oversold and overbought principles. I also use it for diversions. Working on something as well with it where I do pay attention to the zones in which the RSI is at. I don't have it drawn on here, but you'll see me typically draw out a level here at 66, another one at 33, and pay attention to the ebbs and flows depending on which zone it's at. But mainly looking for divergences in the market and overbought, oversold scenarios. Now, it's important to tell traders that are new. Yeah. I think a lot of traders think the RSI is a reversal indicator. It is not. It is a relative strength indicator. It measures how strong the market is. It doesn't tell you reversals, but you can use it in kind of the general theory. What goes up eventually must come down. So when you see the market in an overbought or oversold scenario, it doesn't mean it's going to reverse right away, but it could give you a clue that a reversal is coming, especially when you compare that with diversions. But I think a lot of traders get into trouble because they want to sell it right away as soon as it's oversold. And here's a good example right here.
Yeah, it could
going oversold simply just means it's strong, right? Yeah. So if you're selling it right here, I mean, you're going to take a loss just simply trying to trade it while it's oversold. So it's a good complement, but in my opinion, price action should always come first.
Okay. All right. Was there anything else that you want to present to us today?
I didn't have anything planned. If your listeners want me to take a look at a pair, I can. I apologize again. It's just been a rough,
okay, buddy.
rough
I
week
know
for
you're not feeling well. Why don't we do this then, Akil? What's your recent business model and website, and for people to follow you when you're feeling a little better, and people that are looking for someone to teach them? What's the best way for people to do that?
Well, I got a few places. My business is tier1trading.com. You can head over there. We do mentorship and coaching, lots of fun stuff like you're doing here, live rooms. We do accountability sessions, training courses.
Want to show the site?
Share your screen. Sure. You can also find me all over social media at Akil Stokes RTM, Trading Coach Podcast. I have a podcast out as well, which comes out 3 times a week. So I'm just all over the place, just trying to deliver quality content for traders and just, kind of help people that are in a similar situation that I was in, where they're looking for something that they can do to change their life. Doesn't necessarily mean go full-time trading, but something they can do to change their life and help them, whether they can pay for education or not. So it's
well, you know what? Your story reinforces this fact. You're either going to pay to learn or you're going to pay the market.
Yeah, you're going to pay someone. That is true.
Yeah, you're going to, and hopefully you don't pay the market in Ivy League tuition. That it's more like a community college or something. But, I appreciate the mission that you have because of all the hype out there, and you're a straight shooter, and appreciate that. I know you, and that we could get together and talk once in a while. I hope you and your family stay safe, and
you too.
All your students and mentees rise to your level in their trading as time passes.
Thank you. And again, apologies. I know you don't want to hear it, but apologies once again for just not being on my A game today. But hey, didn't want to call out. I love doing this.
Your C game is most people's A game. All right. So anyway, it was a great conversation, and I root for you, Akil. And
thank you.
Wanted to thank you for dropping by on a Friday. Get well, Godspeed, and thanks for being with us. And I want to thank everyone for hanging out with us. Remember, don't just count your pips, count your blessings, and have a great weekend. And we'll see everyone on Monday. Thank you again, Akil.
Thank you. Take care, guys. Appreciate it.
All right. You're welcome. All right. See you, everyone. See you, Sinatra, Colin, Andre, Nazimja, Jugal. Adios.